Good morning, traders. Welcome to Monday of this beautiful week of Thanksgiving week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump in, as always, we need to check the news and kind of see what's going on and when it's going on so that, traders aren't necessarily stuck. Keep in mind, this is going into a holiday week. You're probably going to hear me say this like every time this week. But being that it is a holiday week, I'm only going to be looking to be anywhere near the markets Monday, Tuesday, Wednesday. After that, for the rest of the week, and likely the majority of people will be taking the rest of the week off if they haven't already. So just keep that in mind. Play it safe a little bit more this week, like we talked about in the weekly brief. But as far as the news goes for today, we don't really have a ton. It's a bunch of medium news announcements, small news announcements. That's really about it. At 8:30 today, we have the Chicago Fed national activity for October. At 9:30, we have the two-year note auctions. At 9:45, that's the only quote-unquote big news for today. The manufacturing PMI forecasted at 53. Previous was 53.4. We also have the market composite PMI at 9:45. Previous was 56.3. Services PMI for November at 9:45 as well, forecasted at 55. Previous was 56.9. And then we go into the later morning and afternoon session, which is, just a bunch of note auctions, bill auctions, etc. at 11:30. At 1300 Eastern, we have FOMC member Daly speaking, and then at 1500, Chicago Fed President Evans speaking. So not a whole lot on the news calendar. The only real big news for today is at 9:45, and then again at 1300 Eastern. But that's really about it for today. So let's jump into some charts and get into some fun stuff here for today, which is 11/23 of 2020. And first market up to bat is going to be the NASDAQ, as per the usual. And the NASDAQ, although we are going into kind of some weirdness as far as the week is concerned, we really didn't see a whole lot of gapping or any craziness. The market had that big slide off going into the weekend, and then we opened up with a relatively small gap. Actually a small gap down that kind of flushed and popped up, and that made a giant bull engulfing candle. And the market's just been kind of having a hard time. And if we look at that bull engulfing, we can see measuring that to the upside for a one-to-one move, that's right around where the top is. So it makes sense. We're seeing some buyers taking profit if they were long, and we're also seeing sellers pushing back against the bottom of that earlier range, right? Once support, then it becomes resistance. So this is the seller's chance to try to take it lower. Now, the reason I say their chance to take it lower, because if they fail to move lower and end up even down here, starting to reverse back up, that could become a very large problem for sellers. That's a huge flush into a potential higher low reversal, and that could be begging for the highs. So if they are going to start pushing to the downside, they're going to want to follow through. And if they do follow through, likely objectives are down through the lows back towards previous support of 57.50. Now, if the sellers fail and we get that higher low transition back above, then we might be able to find some resistance back up towards the top of the falling wedges and channels, and again, more so likely that it's going to be higher low transition. So even though there is sell resistance there, looking at that previous resistance to turn into support and then try to rally the market back up again. So today's going to be a little bit interesting. Up here, there's just so many things that it might get a little bit gross. At least down here, if we were to get a quick little flush and start showing signs of reversal, we've got some room rather, for it to move and expand. So something to keep our eyes on here for the NASDAQ. Right now, we're kind of on that tipping point. We just got to see which way they want to go. Over on the S&P, very similar situation, obviously, but as we have seen lately with the S&P, it seems to be a little bit stronger than what we've been seeing on the NASDAQ. So far, zooming out, if we look at the bigger picture, we had this kind of wider channel, got a little bit gross, but I didn't really want to get rid of it yet because it still appears as though the market's responding to it. Normally, when it's come this far detached from it, I'll just look to get rid of it, but when you start seeing response, it's hard for me to ignore it, So there may be a larger channel at play that could end up looking something along the lines of like this, that we may be able to work with. And you can see it's starting to fit on the bottoms, but the smaller channel is definitely something we're likely going to have to contend with for a while. The previous level of support has now become resistance, and that's in that area 3581, 3582, where we're trying to get back up to. They actually just missed it up at 3580, so it wouldn't be a surprise to see something similar to what happened last time. They cycled up, just missed it, pulled back, and then jumped up, hit it, and failed all the way back down again. We might have something similar to that. It looks very consistent with what it's done previously. So we've got that kind of early morning ramp to the upside with resistance above. That's going to be the area where sellers are likely going to try to push back. And just like the NASDAQ, that's going to be the tipping point. Do buyers want to continue it back up for that higher low reversal, or are we going to get that break back down towards that 35.45, which is the next zone of support? So really dependent on how the market wants to respond here. Are we going to deal with a higher low reversal, or are we still going to be playing off of the wider range rules? It's going to be interesting, especially with this channel kind of cutting right through the middle. That might end up lining up really well with that higher low. It could get pretty interesting here on the S&P. Over on gold, we've got some pretty good movement going on here. Nice bull channel that was trying to cycle its way higher, and it overshot the top, right? So see that big blow off on the top of the channel. Usually when that happens, it's looking to overshoot the lows, right? It's got to equalize a little bit, but it's done a little more than equalize. We've gotten a pretty strong break to the downside, and with this move down, that doesn't necessarily mean the buyers have lost interest, but it does mean that they're looking for deeper interest, right? Not wanting to buy way up at these shallow breaks because it's not bouncing. We've got to see some support actually coming in before buyers are going to put up too much of a fight. So at 1860, that's the first zone of interest if they want to try to hold that higher low and try to ping the market back up. And if they're trying to hold the higher low but just deeper, the next area of interest is the 1851.9s. If it starts breaking below that, then, well, it becomes a little bit tricky because we haven't really had prices down there for a while, and then we have to start going backward in time a little bit further than we're usually having to. So if the market does want to cycle back up, obviously the bottom side of the channel, and likely the move that we're seeing is one of two things, right? This big move to the downside with this jerk to the upside. Now we finally see another one, and it's failing again. This just seems like a three-peak low that's driving its way down and looking for a potential channel, right? That really, really wide channel. So these zones of support don't really line up very well with that bottom. And so if the buyers don't show up, for me personally, if the buyers don't show up in these 1859s, 1860s and start defending, I don't really know that I'm going to be too interested down here. It just makes a little bit more sense to see the market fall a bit further. Now, if we do get a ramp really well to the upside and it starts breaking up, then the next zone of resistance is going to be floating up in the 83s towards those previous double tops. And if it does make it even above that, there's not a whole lot of room higher until the 90s, which is the next zone of resistance. On crude oil, we had a really, really nice push to the upside, breaking above that consolidation. And that was kind of the big thing that we were looking at, seeing, how do they want to approach this from that wider perspective? It seems like they're trying to break it higher. But notice what happened when we came back to this high, right? It was just a brick wall. It had a very, very difficult time up here at the highs, and that was that major level of concern into those 43s, and it didn't do so well, rejected right back out. So with a failure move back down, looking for deeper movement, it's not necessarily likely that buyers are going to want to buy way the heck up here at 42.75 when there's not a whole lot of structure to defend it. Now, don't get me wrong, if we start showing support to the upside and they can hold and start breaking back up, then sure. But there's so many problems with all of these long moves. If you're buying here, then you've got the wedge top. If it's buying here, then you've got the resistance top. If it's buying here, then you're trying to buy a breakout. Best of luck, right? Low probability. So it's none of this up here, none of it looks good. If we can get a deeper move down and then start consolidating down here, totally different story. Now we've got structure. Now we've got channels. Now we've got pivots. I mean, we've got things to back us up. But just where it is now, it just doesn't make a whole lot of sense. So not a huge fan of buying where it is right now. I would rather just kind of let it go if it's going to go higher and see if we can get a deeper move down towards the 42.40s for some potentially better pricing. Next up on the list, and speaking of higher-low reversals, we've got plenty of them over here on the euro. First off of the bottom, big higher-low reversal. And it wasn't necessarily a confirmed reversal because we never really broke these previous swings. It did end up doing that, which led into the next higher-low reversal, which ended up just being part of a larger higher-low potential reversal that's going on right now. I say potential because it's just peaking above the top. Now, you'll notice it's just peaking above the top, and it's forming some very, very tight-knit consolidation. This is great for potential breakout buyers. The only thing that's a little bit of a bummer is the fact that it's already up to R3. Now, remember, these are Fibonacci pivots, so R3 isn't as strong as it would be on a normal pivot basis, and the market can certainly get beyond these points, but these R3s, it's really tough to want to mess around with those. This area here is forming a beautiful pennant, and for a breakout move to the upside, it makes a lot of sense to see some good continuation, and maybe they can finalize it up to the channel highs, and that's where we start seeing a little bit more sell resistance coming in. Now, from the middle point where we are now, which is definitely the midpoint, we really don't have a whole lot to work with. This area can be support or resistance. If it wants to pull back a little bit, then the midline can act as support, or if it breaks down, we can use it as resistance. But realistically, until it starts getting down to these lows, it's going to be tough to want to do much of anything. We can see volume stepping up big to the plate on this most recent break to the highs. So with this break to the highs, it's pretty obvious that bulls are taking profit. It's just a matter of, given how strong of a breakout this is, if they're going to look for continuation and how strong of a continuation move that's going to be. And then finally, we've got Bitcoin, which is really just cycling in a gigantic channel. It's got a little bit gross here on the on the 22nd, 23rd. But realistically, now that the market's given us a little bit more proof going into the early morning hours with a re-support down here, they attempted to break through the lows of the channel. That basically made it was like, well, is there actually a channel here? I don't know. It looks kind of gross. Maybe it's a little bit wider. You can see a lot of excuses coming into why this might be looking to break down. So I'm not necessarily too convinced that there's anything there. But when the market came back and holds it again, well, obviously buyers are watching there. So knowing that we have a bit more continuation and knowing that a lot of buyers were probably a little bit weak on the trigger pull there, when the market does pull back, hopefully sooner than later, it's likely that those buyers won't be so weak this time around. They're going to be looking to really reload now that they know support is actually there. So a nice dip back down to those 18,200s, 18,000s. That's the huge zone of support. If the market does start breaking out to the upside on Bitcoin, then realistically, we're right at the top of the wedge. If it's going to start breaking out, then it's looking back to the top of the channel, and then that's 19,200s. We start getting into that range where if those all-time highs, they're not too far away, and we know how jumpy Bitcoin can get. Maybe it wants to jump up and take them out, right? What a way to go into Thanksgiving with a jump above 20K and start ramping this thing to the upside. So keep an eye on this bad boy going into this week. Should be interesting. All right, well, that's going to do it for today. Stay safe out there, keep those stops in play, and let those winners run. And just a heads up for the morning briefs and the daily briefs and all of that stuff, I'm going to be looking to do that because of the Thanksgiving holiday, Monday, Tuesday, Wednesday. And then after that, probably cutting off for the rest of the week and coming back next week ready to rock and roll. So we'll see you guys over the next few days. And then after that, we'll move into the Thanksgiving holiday. So rest up, and we will see you all tomorrow morning. Thanks.